Hi and welcome to the market alert for Thursday the 12th of May 2022. So bonds, bullion and black gold bid as bad inflation batters Bitcoin and big tech. So that was the news yesterday, and that's because the news came out with it higher 0.3 compared to the forecast of 0.2, previous 1.2. Didn't think it was that bad myself, but there's a lot being made of it today and yesterday as well. New squawk, Asia Pac market opens, markets whipsawed post CPI data. So obviously there's a threat that interest rates are going to be moved higher. Inflation threat starts with the Fed. President Biden comments on hotter than expected CPI. I'm surprised he can comment about anything, frankly, but there you go. Stocks, bonds and Bitcoin battered as hot CPI surge in rate hike odds, and this is an interesting subhead because just might put a 75 basis point hike back on the table. Well, let's wait and see, shall we? I very much doubt it, but you never know, do you? We live in very strange times. And finally, 18 signs that food shortages will get a lot worse as we head into the second half of 2022. You want to have a look at the number of news items with regards to the shortage of diesel as well, which is only going to impact on food prices as well, obviously, because it's a fundamental part of delivery and also the creation with diesel used for tractors and in the agricultural communities. It's shocking what's going on when you start to peel away the layers. And talking about shocking, well, this is the gold-silver ratio, and as I said, that we're heading back to 100, and it's now well within sights, as you can see there. Silver price continued to be hammered despite the fact of, again, a damning in CPI number from yesterday. The market is being dragged down overnight, and $20 is the next downside target. We'll look at that in just a moment. This is all to save the US dollar. It's nothing more, nothing less. It's not about you. That's for certain. The government's never cared about you, so don't be disappointed when they do nothing for you, but it's about saving the US dollar and whatever they can do to keep the US dollar up, and anything that's inversely related is going to be pressure to the downside. Doesn't mean to say that it's not going to go up at some point. It will when the dollar dies, and it will, but at the moment we're in that phase where we must save the US dollar. When you've got other geopolitical situations where the dollar is being dumped, then it's a case of they've got to try and do whatever they can to show that it's still the world reserve currency, which it is, that I accept, but it's losing its favour. So yesterday the Dow moved lower as well, as we can see there. Continue to move the market below that 32,230. We've got to move on to the bigger time frames to actually see what's going on now. And in the weekly chart, you can see that we're actually through 78% retracement of this up to here and then back down. And we've got the 89 here. Also, the monthly chart is starting to look very interesting because now we're getting this sort of trend to the downside. There's your bigger picture of the 78 and 89 retracement. We've also closed below the 20 bar moving average in the monthly chart as well. So it looks like the all-time highs at the moment are off the table, unless, of course, the market, or the Fed I should say, come out, stop raising rates and go back to printing. And there's a very high chance that that could happen as well. So at the moment, the Dow is on the skids once more. Yesterday, the CPI number in the Dow, you can see what happened. The market sold off sharply. In fact, how sharply did this sell off? Let's just have a look at this one bar here. Yeah, 500 points in the Dow before the market then came back 700 by the looks of things. And then we got the 89% retracement overbought, and the market then went south and continues to do so, taking out the low at the moment. We could get a bounce, as I spoke about this the other day. I think it was Tuesday. A market doing a reversal and trading back to the previous day's high. There'd be a lot of buying to do that in the Dow, though, to come back to that sort of level. I mean, at the moment where the market's currently trading back to the high, just a ballpark figure, is 894 points. It's not unknown, it's done it before, but you may get a small bounce. Very much doubt you get 894 when we've got the inflation pressures behind going on behind the scenes there. In the German DAX, well, we're starting to see a similar thing. Yesterday the market was pumped to the upside till the CPI numbers came out. The market then moving lower in the daily chart. Now you can see that we've got a 78.89 and the market currently trading at 62, 50 above the 20, 20 above the 5 and 5 below all of the averages at the moment. I think, let me just see where the 200 yet, 200 above as well. So certainly bearish at the moment in the 30-minute chart yesterday. Say the market was pumped up, then the CPI numbers then ramped back up again. This is what they do. Don't forget, 1:30 the news comes out, 2:30 they need to get the market back up for the sell orders that are on the books in the cash market, and then once those are fulfilled they can move the market lower. The DAX currently at yesterday's low. If it breaks this, then expect prices to continue lower. In the monthly chart, again, you can see also that we've got an established downtrend now. 50 EMA, if this is taken out, we're heading down to these levels here. And in the weekly chart, just a closer view, we're at nearly at the 200 MA. Keep an eye on this as well, and this 62% retracement there. Bit of a closer look at what went on yesterday in the 5-minute chart. So the market was sideways, waiting for the news. About 8:40, 9 o'clock, the market started its move to the upside after being oversold, became overbought with divergence. The market started to pull back, had a bit of a pullback there, about 50 points. Again, became oversold, divergence, etc. Market moving back up, and again doing that classic of moving the markets back up to try and hold before the news. CPI numbers came out, market down, seriously oversold, momentum starting to switch, and then bringing the market back ready for during the Dow trading session, as you can see there, following the market to the upside, staying just sideways. So I didn't follow the Dow on the downside because obviously when the market opened, prices were just brought back, ready to get rid of those sell orders, which you can see. This is the bar that the Dow opened, the market being brought back. So the DAX was quite strong at this point. Overnight, though, of course, we're now at the crucial point of the low. It is 15 minutes to 7, so we could see a bounce off the DAX at the opening of the futures. In the currencies, dollar is king. GBP, JPY moving lower now in the daily charts. Yesterday on the CPI numbers, you can see being moved sharply lower and continuing already below yesterday's low. The pound getting absolutely crushed, continues to move lower. Again, we've got to go to the bigger time frames to see what's going on here. 78%, $1.20 is the next downside target as the dollar gets pumped to the upside. In the 30-minute pound yesterday, again, you can see also reacting to the dollar, because if that 75 basis point headline comes to fruition, then the pound is going to be incredibly crushed, as it will be forced lower. Let's just have a look at the dollar before we go into the metals. You can see there we're still in this sideways range. It's incredible, isn't it? The dollar, you can see, is being manipulated higher, or being held. It isn't actually breaking through strongly to the upside, and yet the metals are being crushed. So again, you can see how this manipulation is going on at this time. In the monthly chart of the dollar, we're trying to break through all of this, which I think we have done. Yeah, we're through all of these areas now, and I think we're back above 104, aren't we? Let me just have a look in the smaller time frame. Yeah, we're back above 104. So again, do just need to take out this high here. 104.16 and a half is the target there. So to the metals, silver being crushed, despite the fact that yesterday was inflationary. It doesn't matter, we've got to save the dollar. And if we go to the 30-minute, you will see that's how you should see it, and it should continue to the upside. with the inflationary background. But no, it didn't take long, did it? Sideways, and then overnight we're already being crushed. Where we're going to? Well, we're going down to here. This is $20. This is the first downside target, and we may actually come to the golden ratio from here to here of $19.18. I wouldn't be surprised at all if we break $20, because, like I say, the aim here is to get the US dollar well and truly back up to that 120 level. The only way they're going to do that is to continue to increase rates. That's going to be dependent, of course, on whether the market will hold. If the market starts crashing and the liquidity dries up to the point where they have to acquiesce and then come back and print. So again, only time will tell, but you can see what the plan of action is at this point. In the gold market, this holding up a bit better, which is why you're seeing the gold-silver ratio being moved up at the moment. Like I say, we're going to 100 on this anyway. I'd be surprised if we don't. That's 100 silver coins for 1 ounce of gold. Gold holding steady there, back above 1850 yesterday, bouncing off the 200 MA. And finally, in the crude oil market, also finding a bit of support there. A lot of volume over the last couple of days in this market as well. Like I say, there are diesel shortages coming. There's 2 or 3 news articles about this on Zero Hedge as well. And as somebody who owns a diesel vehicle, I will be looking very carefully at finding some way of getting a few jerry cans. I'd rather have it, not use it, than be caught in a situation where that is going to happen. The same with the food. Spoken about this for the last couple of years, been preparing for that as well. It's coming, there's no doubts about that. It's like it's being engineered beautifully, isn't it? So that they can keep inflation up. They don't care about inflation, they care about saving the US dollar. That's all that matters at this time. Okay, that's it for this one. Let's see what happens this morning, see if the weakness continues in the stock markets. But I can guarantee you one thing, the crushing of the metal prices will continue today, as will the strengthening of the US dollar. Okay, that's it. As ever, thanks for watching. See you in the next.